Alan, when most people think about BHP Billiton, they don't think about shale oil in the United States. They think about big holes and metals coming out of the ground in Australia. So the announcement today from the company might come as a little surprise to some people. How big a part of their business is oil?
Okay, so what they've announced today is that they're going to cut back 40% on their spending for drilling on shale oil and shale gas in the lower 48 of the United States. First, it's important to know, yes, BHP is a miner. But for a long time, not recently, but for a long time, they have done oil. Oil has been a big part of their business. It's become bigger since about 2011, 2012, when they bought properties from companies like Chesapeake and Petrohawk to get into the shale oil, shale gas game.
Probably not good timing, but timing of commodities is notoriously difficult. How big a chunk of their total capital spending is the proposed cut?
Okay, so they had about, in unconventionals, which would include the shale areas, about $4 billion had been the CapEx target. Another 1.5 was conventional, which is more of their deep water oil, deep water Gulf of Mexico, and things that they have in Australia. They're not saying exactly how much.
What's the total budget?
And so the total CapEx budget for the company is around $14 billion.
So it's a big chunk.
It's a big chunk, yes. And the company next month is going to have its interim announcement, and it's going to discuss its CapEx figures again. So all this could change.
So we'll know how much of that $4 to $5 billion piece is
going to come down. Yeah, I mean, some analysts are saying about 2.
Okay.
Right, so.
Now, at the same time as oil prices are falling, the iron ore price now at what, 70?
Yeah, below, actually,
below
68.
68 has fallen precipitously as well.
Yeah.
How's that part of the business?
Well, this is the bigger deal, right? This is where BHP and Rio make a lot of their money. The returns are more than double for iron ore relative to oil or even copper, another major product for BHP. So it's important. It's not a big part of their capital spending, so you can understand why they're very happy to just keep on keeping on with iron ore.
But iron is the sort of economically decisive factor. What are our thoughts? I mean, we don't predict commodities here at Lex, but what are the sort of big pieces of the supply-demand equation
on
now?
the supply side, you have 3 major players and some smaller players, and 3 major players being BHP, Rio, and Vale in Brazil, 2 of them with major assets in Australia. The 3 of them more or less control the market. I mean, that's I don't want to be unfair to them, but they are driving where prices go. On the other side of this is demand side, and half of the world's production of steel, which uses iron ore in abundance, is in China. Now, that was fine when China was needing more and more steel for its own domestic use, but I noticed that Chinese steel exports have really picked up in the last year. They've doubled to 16 or 17 million tons. That's a lot, even against 130 million tons for the global production market.
So it sounds like BHP needs to make savings where it can.
Yeah.
Thanks very much, Alan.